Hello, fellow traders. 'Tis I, the Rumpled One. Let's talk trading. It is Wednesday, February 28th, the year 2018. Simple. Keeping it simple. Practicing simplicity in trading. Let's see, there was I guess a reply to a video about the price action. And, well, to me, it's really simple. But I see so many people, so many traders adding, and I think the thing is you're supposed to subtract. You're supposed to subtract everything till you can't take away anything else. And you keep it simple that way. Because adding is complex. You're adding complexity. I mean, I'll talk a little bit more about it, or maybe I'll just go ahead and we can talk about it now. On the, let's see, find that price action screen. I'm talking about the 3-ball. I mean, it's really simple. You see the 3-ball here at the bottom. You let that candle close. The next candle opens. You can see right here, it was green at the 37.80 line. It went all the way up here. All you had to do was put your entry here and go. There you go. Now, people say, well, what about the stop loss? Well, that's kind of simple because you see here, if price meets this line, the candle's red. If it hits that line, price would be telling you to go short, even though your short trigger was actually back here, but it's telling you, so right here, you've got basically a 10 pip stop loss before you're wrong. And you see, it's no more complex than that. That's it. It is simple. And adding anything, adding squigglies, adding anything more to it is complicating matters. I mean, you can look anywhere here on the chart. I mean, right here, we've got a price turn. Green, red at the line, you go short. Here was a price turn. Green at the line, you go long. That would have been a 10 pip trade right there. So you can see here, it's not that difficult. You just have to keep it simple. And that's what we're talking about. We're talking about keeping it simple. So for price action, don't add to it. If anything, take away. Strip it down. Start with the basics. We got a horizontal line. We got the 3-level ZZ indicator. That's it. You don't really need anything else. Except, of course, you need some money and risk management, but we already know where the stop loss is. It's going to be 10 pips at the most. I mean, that's it. There's no reason to have any more risk than that 10 pip stop loss. And let's look at the weekly chart. As you can see here, a couple days ago we were up here, now we're down here. Broke out of the previous week's low, and you can see there's a lot of pips on the table there. So what, there's 77 pips between price and there. Nice trade for those trading that little breakout. And you can see the weekly open, 186 pips. Once again, simple trades, trading with candle color at those lines. I know, I repeat myself almost daily, but I mean, that's what good trading is, repeating what works on a regular recurring basis. And here we can see on the daily, once again, taking that breakout. I mean, look at that. Good. Right now, you'd be up 79 pips had you taken that trade. Daily open, 125 pips. It's not that difficult. It really isn't. There's nothing on these screens that are complicated. Oh, and by the way, let me just mention this. There was somebody asking me about the setups and if they were free or something. And it's just like, yeah, I talk about these methods free. You got questions, you can post them. I would prefer you post them unless you have something that's really, specific to you and probably you only. Then you send me a chart and tell me the exact indicator name you're talking about and I can help you out with it. But yeah, These are free. No, the dashboard, that's a donational, but you don't need the dashboard. You know, the other indicators that I use, the TRO 5, you can look in the comments section or the little description box here below the video, and that'll tell you where you can find this. In fact, I need to upload the latest version of TRO 5. I put it out on my Facebook page because at the time the website where I normally post my indicators were down, and then after that got back up, my main computer's down, so it's just been a comedy of errors in February 2018. So the main thing is, yeah, the indicator that does this, it's a freebie. Now, the thing is, you don't even need that indicator. You can put a horizontal line here. You can put one there. You can put one there. You can put one there if you want. It's not difficult. You can just use the chart tool and do it. I mean, in fact, it might even be a good idea to do it at first. It's kind of like math. Learn math, then you get to use the calculator. So it's kind of like learn to read the chart, learn how to draw the lines, then you get to use the indicator. So, you know, kind of think of it that way. Yeah, and you know, the indicators, it tells you, you know, how many bars ago and how many pips price, you know, the close is away from this line. Now, yeah, that's nice, handy dandy, but you don't really need it to trade. It's just helpful. And once again, here we go, buy zone. You can see here, you might have stopped out here, or you might have come back here and just scratched that trade. Short zone, once here, buy zone, sell zone, couple of scratches, another scratch on the buy zone there, and then finally it paid off, and it paid off huge. So the thing is with the pound, what does this tell you? The first 3 hours, that's New Zealand, Australia, don't trade it. And the next 1, 2, 3, 4, 5, 6, 7 is Asian session up to about here. Somewhere in here is when London kicks in. That's when you want to start trading the pound. Don't trade the pound back here. It's just not smart. Now, here we go. You see here, we didn't have the zones were all on top of each other. But here in the rat zone, you see it did pop out. And if you didn't take the trade, it gave you a second time to get out with a profit. And if you're in a loss, that's your fault, not the method. And here we have the pivot. You see here the open. It went toward the pivot, didn't quite make it. So it broke out of that pivot channel. And so it's telling you it's going the other way. So you might as well just kind of almost scratch the trade or just take a couple of little pips. And you can see here we're at the daily S2, weekly S2, daily S3, and the monthly S1's down there. And we've already gone over price action, but it really is simple. And do you need all of this? No, not really. I mean, you can look and see higher high, higher lows. Now, the multimeter is just telling you how many higher highs, lower lows, higher lows, lower highs you had in a row on each one of the time frames, which can kind of give you an idea, if you just look quickly, which way to trade or which way you better not trade. But you can just look at the chart without these. You can see here, once again, you got the sweet spot gold indicator here that I modified to put the price boxes in and give you other controls. You've got the 3-level ZZ semaphore, and those are really the only two indicators that you need if you just want to trade this method. And once again, 5 lines. You know, you can do this yourself. You can take the daily. You can go here, here. You might have to get your calculator out to figure out what the midpoint is. And then you have your close. And you just put those 4 lines on a daily chart. Switch back to hour or whichever. And then once again, as you can see, you trade with the H1 candle color at the line. So right here, starting the day, you can see here that the close is pretty much the open. And then you see here it hit the low, red candle, nice trade. And we've seen that on a couple different charts. But, you know, once again, it really is simple. And as you can see, this was a wick zone trade, in the wick, out, in, out, in, out, in, and out. And we do this every day. And the holo, here we go. We entered the holo, came out, came back in, gave you a second opportunity, and look at that. I mean, it's simple. Then you put in here, it gave you an opportunity to get out, take some pips, and it's crawling right back out again. It's the holo. Yes, okay, this indicator is not a free one. That's a donational. Anytime it says TRO in the year, that's donational. And you can see here, it's basically the only indicator here. But once again, you can do this on your own. You can take a chart. You can look at the highest open, or actually, let me see. Let me just go ahead. Let's do this. Let's turn it into a H1 chart. Okay, and so we have to look back. We need to insert a horizontal line, and we go, okay, this looks like maybe this was the highest open. Yeah, 0, 0. Looks like this was the highest open. Boom. Okay, and let's do another horizontal line, and this was the lowest open right here. And so there you go. You got your highest open, lowest open. So if it's below this line and it goes up, you buy. If it's above this line, comes down, you sell. Once again, guys, traders, it's not that difficult. Okay, and this is just looking at the price action on the tick chart. Maybe I should take this off because I don't know how many of you guys like to scalp for just a couple of pips, heavy, you know, heavy positions, just taking a couple of pips off. I kind of use this as a trade trigger, especially it's really good like in the any of the zones, but like in the rat zone, you're looking for that reversal, you know, and because sooner or later you'll catch that one and you'll catch it for a really nice ride. And, you know, it also allows me to stay in the trade because if I'm going short, okay, and it's doing here until the bid actually gets above that lowest ask, I might as well stay short, and vice versa. Until that ask comes below that highest bid, I might as well stay long. So that's what that is all about. And it's just a true price action. And if you're curious, how did I figure that out? Well, if you hit F9, you know, this will come up, and you can see right here. You see, there was the lowest, and then price kind of went above, but then it didn't. And right now you can see that the ask is going below that highest bid, but you see here it's really faltering. So ask really has to crack this area for price to go down, and the bid has to crack this area for price to go up. Otherwise, it's just pretty much oscillating within the bid and ask spread. Okay, so that's how I came up with that, in case you were wondering. So, but fellow traders, as you know, you need to keep it simple, and it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.